Hello and welcome to another edition of Business 7. Now, as COVID-19 continues to wreak havoc in the world, the debate is gaining momentum about whether the employer has the right to force the employee to get vaccinated against the virus. Now, in today's Business 7, the published version of which you can find in Allgemeine Zeitung, Republikein, and the Namibian Sun, and it's also online. We have features on this unfolding debate and the various international points of view on the issue. On the local front, we look at economic forecasts, the latest ones by the private sector, and the extent to which they think the third wave might impact growth. Later in the program, we will show you the whole issue around the fuel price increases and how that will impact the economy. And there we have spoken to Simonis Storm economist Theo Klein. But first we're going to take a break, and after that we will be back with a look at the local economy. We are joined in the studio by Theo Klein. He's the economist of Simonis Storm. Theo, this is the first time that you are joining us in the show. So very welcome to the Business 7 clan.
Thank you for having me, Jo Marie. Much appreciated.
We're talking to you today about fuel prices and its impact on the Namibian economy. So we've seen over, especially the last couple of months, a massive increase in the fuel price. Can you just quickly give us some overview of what is happening in that arena?
Yes. So despite the rand strengthening significantly over recent months, we've still seen higher petrol prices locally in Namibia. And a big part of that is because, the lockdowns imposed on almost all countries last year, that artificially decreased demand for petrol or for oil or transport, so to say, because more people stayed at home, and so there was less demand for traveling and so forth. But now, with the ease of those lockdown restrictions, we see a pickup in demand for transport again. But in that time, so when that happened, there was a shortage of oil in the global market. So there was an increase in demand, but supply could not meet it. So because of that shortage, we've seen elevated oil prices, and that had to be filtered through to higher local petrol prices for Namibians, despite the rand being so strong.
Okay. So it's like a double-edged sword. Normally we benefit from the stronger rand, but in this case, it was balanced out by the price.
Due to the shortage in the oil supply.
Yeah, so it became a supply and demand issue, and that, economics 101.
Yes.
But I like to keep these things in layman's terms so that we can all understand.
Yes. No problem.
Theo, how important is fuel when it comes to inflation? How big a factor is it?
Look, so within the consumer price index that's used to calculate our local inflation, transport is the third largest item or category in the basket. So it typically plays a major role in driving our local inflation numbers. Just taking last month's inflation report into account, the transport category contributed about 32% of our local inflation, the change in our local
Yes.
inflation. So about a third of our change in inflation can be explained by the transport category. So it does play a big role. Obviously, we must remember in the transport category of the basket, there are many other factors such
Yes.
as the prices of spare parts, maintenance, service of transport vehicles and
Exactly.
equipment, and so forth. So the petrol price is not the only factor in the transport category, but nonetheless, it is a big part because it is a big part of the budget of most households.
Yes.
The other thing is it's not just for a big part of households' budgets, but for businesses as well. I mean, even food
Precisely.
prices, for example, can be influenced by petrol prices because your local grocery stores, such as Spar and Pick and Pay, need to transport food prices from one branch to the other, from warehouses to their retail outlets. So the higher petrol or diesel price can that they need to pay to fill up their trucks to transport the food products can also lead to higher food prices in the retail outlet stores. So it definitely plays, it's not just for households in their budget, it plays a big role for other sectors in the economy as well.
Exactly. It's that spillover effect that we see, and because transport is such a big part of our consumer basket, it has quite a massive effect. And
Yes.
yes, transport inflation, it doesn't discriminate; it hits all of us.
Exactly, yeah. Both businesses and households, yeah.
Yes, indeed.
Yeah.
With the Namibian economy being in the state it is, what impact will this have on the economy?
I think we've seen petrol prices or local fuel prices being unchanged for the last 2 consecutive months. So I think maybe I'll first like to say that we can definitely expect a fuel price increase for September. It is very likely. I think the government also tries to limit the pass-through effect of a higher oil price onto the consumer in terms of higher fuel prices. But the government can only absorb so much of the costs, or ask petrol stations to, absorb so much of the increased costs at the expense or to benefit the consumer. That can only be done to a certain extent. So I think households should prepare themselves for higher fuel prices going forward. We do forecast the unleaded petrol price at 13.95 by the end of this year. So, but I think one thing that benefits, your budget is that we still see remote working taking place with most companies in Namibia, and so I think households can benefit from traveling less, from still working from home and so forth. So I think that will also then benefit them. I think for the month of August at least, with petrol prices remaining unchanged, they will still have more or less the same amount of money available for consumption spending in other
Yes,
areas of their budget.
yes,
So that's why we see the constant fuel prices as somewhat of a relief. Because if you look at South Africa, they increased their
yes,
petrol price with 91 cents.
yes. It's like
So
that all the time.
So I mean, you could easily have expected if South Africa increases 91 cents, maybe we will see 80 or 70 cents increase, but that didn't happen. So I think that's why we say, it is somewhat of a relief for households for now. But I think going forward, with the expectation of higher fuel prices, households should try and not travel. Should try and limit the need for travel and try and save where they can.
Yes, yes. And when we talk about the South African fuel price and the Namibian one, which historically is ours has been much more stable, very often the man in the street doesn't understand that because they get upset when the fuel price in South Africa drops more than it does locally. Of course, they don't complain when it's vice versa. But this all comes down to over and under recoveries and the role that the National Energy Fund plays in this process. Can you just explain for the man in the street what is this mechanism? How does it work?
I think the it has to do mostly with, I know there are many other factors at play, but from what I know is that understand is that it's also had to do with levies and taxes. So levies and taxes are, as I understand, higher in South Africa compared to Namibia. So in that sense, we then also see a big discrepancy in the petrol prices that we as consumers pay. Historically, most of the time, Namibia's petrol price or local petrol price has always been lower than that of South Africa. So I think the Namibian consumer is also better off with that regard. But it primarily has to do with your road accident fund and levies and taxes from the South African government that
Yes.
contributes mostly to the discrepancy in our prices.
Of course, the Namibian consumer can't be protected against spillover in any case from a higher fuel price in South Africa, because we are a net importer. So it will be more difficult to bring produce in, and that increase will eventually, to an extent, be passed down to the consumer in any case.
In Namibia, yes. And also, the government can only shield the consumer so much from higher global oil prices.
Yes, exactly.
Because as you rightfully said, we are a net importer. So whatever happens with the global oil price, we are a price taker. We need to just accept whatever price the global market is pricing oil at. Yeah.
Just a last question, please, Theo. In layman's terms, explain to us what is under recovery and over recovery, because that is what the minister always refers to in the monthly fuel price adjustment announcement.
Jeremy, I'll have to get back to you on that one.
Okay, we can cut that. We can edit that out. Don't worry.
Yeah, okay. Because
cool.
I must be honest.
No, it's cool. We'll just cut that out. So I'll just continue quickly, and then we say goodbye and good.
Okay.
Okay. Good follow. Theo, it's been very, very nice talking to you. As I've said, it's your debut on Business 7, but I'm sure you'll be back in either a virtual or our real studio a lot of times in the future. Thank you very much for your time, and have a very safe day.
Thanks for having me, Germany. Much appreciated. I look forward to seeing you again in future. Have a nice day.
Joining us in the studio is Robert McGregor. He's the economist at Cirrus Securities. Good morning, Robert, and welcome.
Good morning, and thanks for having me.
Robert, we've seen Cirrus Securities, as well as some of the other analysts in Namibia, cutting their economic growth forecast for 2021. In a nutshell, can you just summarize that for us, and as well as your reasons why you did it?
Yes, so we've downgraded our growth forecast this year from the 3.8% we released in January to 2.1% now. The main drivers behind this are lower than anticipated diamond output this year, particularly from Demerara, Namibia, as well as the increase in COVID cases that we've seen this year, this third wave, and the subsequent restrictions that were put in place. So it's obviously acting as a drag on growth for the economy there, with reduced business activity, the impact on household incomes, and the follow-ons from that.
Robert, looking at the third wave and especially its impact on tourism, how will that affect tourism this year?
So we mentioned at the start of the year that we believed the revival in the tourism industry will take much longer than many anticipated. Our forecasts then were a recovery to pre-pandemic levels around 2023, 2024. We maintain that view, looking at it being closer to 2024. Particularly as the recovery in tourism was very slow at the start of this year. In addition to that, now with the third wave that we entered, and Namibia being red listed visit by a lot of countries, subsequent, travel restrictions, quarantines, and so on, that will obviously delay a lot of the tourist activity, maybe push some of it into slower arrival of tourists than we had anticipated, but also the supply side destruction we're expecting across much of the industry. So over the past 18 months, a lot of entities remaining open when it was not profitable to do so, as well as a lot of entities offering accommodation services, often below cost, to try and attract a lot of Namibian tourists, and obviously that isn't sustainable. So we believe there's been a lot of balance sheet destruction over the past year or so, and a lot of the entities won't be able to survive until tourist numbers really recover. So we expect to see some consolidation in the tourism industry moving forward, and that will limit the ability for the industry to recover to pre-pandemic levels as well.
Robert, if one just look at the numbers, it seems like tourism is a fairly small or relatively small contributor to the economy directly. However, it has a major impact on the economy indirectly. Could you put that into perspective for us, please?
Yes, so from a direct sense, tourism is a relatively small contributor to GDP, but it does have a very large multiply effect. In addition to that, it also provides hard currency earnings for the country, which is obviously very vital given our need for hard currency to maintain the peg with the South African rand. In addition to that, tourism is actually a very large employer as well. Unfortunately, the most recent data we have available is the 2018 Labour Force survey, but that showed that the tourism proxy, which is accommodation and food service activities, employed around 80,000 people directly. That is in a year when only about 725,000 people were employed. So obviously more than 10% of the employed persons found in that sector. It also pays cash wages in many rural areas, and obviously those cash wages in those rural economies are vital. It's got a much larger multiply effect because that cash tends to stay longer in those more rural economies as well. So very vital for employment and the circulation of money in other parts of the country. And in addition to that, obviously, there are a lot of linked services to that. So it's not just directly tourism, but it's also those service providers in terms of catering, logistics, and so on. So it's got a very large multiplier effect that spreads out from that.
Robert, we've seen that government has moved their targets for the vaccination to obtain herd immunity, and that they now, even with the lower target, they aim to get about 600,000 people immunized by the end of September. How realistic do you think these targets are?
For full vaccination, it's going to take likely a bit longer in our view. At the current rate, vaccination is incredibly slow. There is a good chance that with the arrival of Johnson & Johnson vaccines, obviously being single dose, it's much quicker to get people fully vaccinated. But at the same time, we need to see sufficient uptake, sufficient rollout, and we need to make sure we get those vaccines here in time before that. And so at this point in time, that target does seem quite optimistic.
Robert, just a closing thought from your side. How important is it that Namibia gets herd immunity to get the economy going again?
So herd immunity is obviously a vital return to much more normalized business operations, reduced threat of further waves resulting in large numbers of hospitalizations, and obviously the damage that causes, as well as there's an obvious and clear link between vaccination, reduced hospitalizations, and lower death numbers. And so obviously that is very, very beneficial. But in addition to that, we need more than just immunization to get the economy back on track. We obviously need a clear recovery plan. And that often, in our view, links to sort of the general reforms we've spoken about many times, particularly with regards to easing the business environment, so making it easier to start, open, and run your business, as well as having a very clear, open, and friendly investor environment, not just for domestic investment, but foreign investment as well, as that catalyst for growth.
Robert, thank you very much for talking to us. As always, very insightful. Have a good day.
Thanks. You too.
If you're feeling how I'm feeling and you know I won't stop, all we gotta do is take our love to the top. If I got it and you want it and you'll never let it drop, all we gotta do is take our love to the top. I will ride for you, maybe even die for you. When I'm loving you, but my heart don't stop.
that was Business 7 for this week. We're looking forward to you joining us in 2 weeks from now. Until then, stay safe.